Okay, we are ready, and we will now interview Mr. Robin E. Goad, President of CEO of Champion Minerals, which I have the chart on screen right now. Mr. Goad, good day.
Bonjour, Michel. Just one correction. It is Fortune Minerals that you're I hope you've got the chart up for.
I do. Yes, I do. It's Fortune Minerals. I didn't say the right name.
You said Champion.
I'm sorry. Where did I get that? I don't know.
We feel like champions.
You may be a champion anyway. Okay, so Mr. Goad, you have a mini project. You have a coal project. You have a gold and copper cobalt project, and I'll say and bismuth. I don't know what bismuth is, but we'll be talking about that a little bit later. Tell us right now, which is your priority project in there?
Well, both of these projects are a high priority for us. They're both in the development phase. Mount Clapan is a world-class metallurgical coal project with a total of 2.8 billion tons, but 231 million tons measured and indicated, and a little over 100 million tons of reserves.
Of coal?
This is a metallurgical coal,
yeah.
And metallurgical coal, of course, is in shortages of supply. But we also have a joint venture partner in POSCO, the third largest steel company in the world. The other asset is quite divergent from the metallurgical coal. It's gold, cobalt, bismuth, and copper, and we are building a mine and a concentrator up in the Northwest Territories, and a fully vertically integrated refinery in Saskatoon to process concentrates to high-value metal products.
Okay, so that's two big projects. Let's talk about the first one, the coal project, which POSCO has a 20% stake on the company right now.
That's correct.
Okay, and they injected the 20 millions already in there.
They've put in 30 million actually.
30.
10 million corporately. They've advanced $20 million to conduct to take the project through permitting and detailed engineering. This is a very advanced project with $90 million of previous expenditures, and we already have a bankable feasibility study showing robust economics, and an update to that feasibility study is expected next month.
And this project is represents a total of $181 million, which you already got 30 million. Is that what POSCO paid for the 20% stake?
Yes, they're anticipated to make total payments and cash contributions of $181 million. They've already advanced the 30. They make future payments, and they're expected to pay 20% of all costs. And it's not an offtake relationship. They're a joint venture partner, and they fund 20% of all costs and get 20% of the coal. So with the capital cost, 20% of the capital cost, they're anticipated to be funding about $180 million.
Okay, so they will actually pay $181 million for 20% cost and 20% of the coal production.
Correct.
Seems to be a lot of money. So don't they have anything else besides that?
Well, it's a $181 million. It's an $800 million project because not only are we building a large open pit mine, but also we're extending the railway about 150 kilometers to the site, so that we can get access to the port of Prince Rupert to export our product principally to Asian markets.
Okay, who's paying for the railroad?
Under our feasibility study, we assume that the joint venture is paying for the total cost of the railroad, but we are working with the British Columbia government as well as CN Rail, and in a very collaborative relationship. It's possible that we may get additional investment coming out of the government, but at the present time, we're assuming that the joint venture, that's Fortune and POSCO, are paying 100% of that cost.
Oh, and I presume the project is in BC, and in BC there are mountains all over the place out there. It's not going to be an easy job to build a new railroad out there.
Well, actually, it's a little simpler than you might expect because the railway right-of-way and roadbed has already been constructed. So in the 1970s, the British Columbia government was building this railroad up to it's called the Dease Lake Line, and they terminated the track about 150 kilometers south of our project, but the roadbed has been almost completely constructed, such that most of the 150 kilometers is simply an exercise of laying track, ties, and ballast.
Okay. That's a big thing anyway, because most of the job is done already. And where is it about in BC? In which region?
It's located about 330 kilometers northeast of the port of Prince Rupert. It's about 100 kilometers south of a community called Iskut, and that railway actually, unfortunately, doesn't go directly to Prince Rupert. It goes southeast down to Prince George and then out to the coast. So the total rail haul would be about 1,400 kilometers.
Okay, I presume the Chinese could be interested in that thing too.
Well, I've just come back from Asia, actually last weekend, where I spent a fair bit of time in China, Korea, and Japan, because our objective now is to bring in a second stage partner to fully finance this project into commercial operation.
Okay, and what about the other project? Because this one is almost underway. What's the next step on the coal project now? Starting the construction of the railroad?
Well, sorry, for the coal project or the
for the coal project?
The gold project. That project is in the final phases of the environmental assessment. We're expecting to be permitted in Saskatchewan, where we're building the refinery later this year, and then hopefully receive permits in the first half of next year in the Northwest Territories. Then we will be in a position to construct the mine as soon as we have our project financing.
And what about the gold project and cobalt project? Is it a part of the same process, or it's totally something totally different? You need another mills, to another concentrator, or another piece of equipment to produce that?
Well, that's what we were talking about. The permitting is coming to a close. We actually own a fair bit of equipment because we bought the Golden Giant Mine buildings and equipment from Newmont. That's the old Hemlo mill. So we own quite a bit of equipment for the project already. But we will be constructing a fairly complex hydrometallurgical refinery in Saskatoon, which will take concentrates produced at the mine site and then process those to gold doré, to a cobalt sulfate heptahydrate, which is used for rechargeable batteries. We can also produce a very high-quality cobalt metal for superalloys, and we have proven in pilot plants the production of a high-quality bismuth ingot, and then also a copper metal precipitate.
So you must be pretty busy right now. I mean, this is lots of projects at once, Mr. Goad.
Well, we have 3 environmental assessments ongoing at the same time, so we are extremely busy. Fortunate that we're relatively well financed and have a very high quality staff of people, and we're making good headway on both of these projects, hoping to get NICO into production at the end of 2015, and then the coal project in early 2016.
Okay, let's talk about your stock now. Do you think because the stock has been following a downtrend mostly all years, and can you say that the price of the coal is mostly responsible of that?
No, I think I think what you're referring to with the decline in coal is really thermal coals, and thermal coals in North America have been impacted by the very low price of natural gas, as well as we had a fairly warm winter last year. We have a metallurgical coal, which
What's
is used
the difference?
Well, metallurgical coal is used to make steel.
Okay.
And it's also
that means you mix it with steel, or that's what you use to make the steel melt.
Well, it's one of the critical raw materials. When you make steel, it's the carbon source that makes crude steel. So typically, in a conventional blast furnace technology for making steel, you have hard coking coal, which is then burned in a low oxygen environment to make something called metallurgical coke. Mm-hmm. That is then layered with iron ore with a calcium carbonate flux to sort of help the reaction, and then it's melted essentially in a blast furnace, and the resulting product is called crude steel.
Is there any other coal mine in production in BC?
Oh yes, Canada is the right now it's actually the third largest metallurgical coal producer or exporter in the world. Teck Resources derives 50% of their revenue from producing metallurgical coal.
Okay, good. Mr. Goad, that's all the time we had left. That was very interesting, and I think we made the point about the company, and well, we think our viewers are going to follow you closely. Thank you very much for coming to the interview.
Merci beaucoup. I really appreciate the opportunity to speak here today, and I hope you and your listeners will continue to listen to watch our company.
Thank you very much, and feel free to forward us any new information. Thank you very much, Mr. Goad.
D'accord. Au revoir.
Au revoir.